Wait a minute. Are you telling me there is a tax credit for buying groceries?
Wow.
Yes. Yes. Now, kicker, it is only in a few states. Okay. So the state that we're talking about today is Idaho.
Oh,
They just there was a tax credit increase from $120 to $155 a year under a new bill. Okay. And so that's a little confusing because you're like $120 is not much. That $120 applies to every person in a tax household, meaning usually you have like head of household or you have married or filing single, and then you
right.
have dependents. So each person in a tax household would get $155 tax credit, and that is to offset the taxes that you've paid on groceries. Okay. Now that's a little confusing because you're like, why wouldn't they just stop taxing groceries?
Yeah.
So if they're just going to give it back to you, why would they, just stop taxing it? So the state of Idaho, they still want to make money off of grocery purchases that are taxed, and specifically tourists. Surprisingly, Idaho has a fairly active tourism. So if you are from out of state and you go buy groceries in Idaho, you're going to pay taxes on them and it's just going to be a normal transaction. But if
Right.
you live in Idaho, and they basically figured out that the average, family of four spends about $10,000 a year, okay, which translate to be about $860 a month on groceries. So that $155 credit per person comes out to $620. So that $620 that you would get as a credit on your taxes offsets basically $10,000 worth of grocery taxes that you had paid.
Okay.
Okay. Now, what's interesting is the other states that offer this is Hawaii, Kansas, and Oklahoma. And I'm kind of surprised that we don't see more of this because a lot of states are looking at ways to do rebates and do credits, and you know what I mean? So,
Yeah.
um, one thing that I found really interesting was, so right now the tax credit is 120 and they're going to up it to 155. And the new law that they're trying to pass, it also allows taxpayers the option of saving all of their grocery receipts for a whole year, and then you could submit those receipts in order to receive a credit of up to $250 a year. So the 155 is like when you think of like a standard deduction on your income, this would
Right.
just be a no matter what, you would get $150 to $5 credit. But if
Yeah.
you're one of those families that spend more than $10,000 worth of groceries a year, if you save every single time that you go, you could get up to a $250 credit per person. Okay. So I think
Man.
that's crazy. Just
Yeah.
absolutely insane.
I mean, that would take some really good accounting skills to
It
hold
really
on
would.
to absolutely everything that way. I wonder if that's only through grocery store purchases because a lot of times, like, we tend to do delivery services where we order meals, like, a box of meals to make because this decision fatigue is real. Um, and this allows me to plan without doing any actual work.
I have ordered like what is it, Blue Plate or Hello
Do
Fresh,
it.
and I do not
Yeah.
believe that I paid state sales tax. Or if
Yeah.
I did, it may not have been the specific food tax because that would be considered like interstate sales.
Oh, yeah.
Because when you go to the grocery store, you'll typically see like on the receipt, it'll say food tax and it'll say the percentage, and then it'll say sales tax, and then it'll say any other taxes that apply to your city or your
Yeah.
county, like a SPLOST or anything like that.
Yeah.
So
So that
I
probably
don't know that
wouldn't
that would
be.
apply for delivery, and I don't know that that would go towards like pizza delivery or DoorDash, or you know what I mean. I'm not sure that they're classified the same, because if you're including like takeout or restaurants, then that
Oh,
obviously could be very easy to spend more than $861 a month,
oh,
you know.
100%. Yeah, yeah, yeah. No,
But
I was just thinking like, so itemizing probably doesn't work for you if you do facilitate delivery services for meals. But like, if you're buying literally everything at the grocery store,
like if you were doing like Walmart delivery or Kroger
yeah,
delivery, that kind of thing,
yeah,
it would still probably be helpful. But if you don't actually grocery shop a lot, which is not too surprising, because if you're of the younger generation, like Gen Z, um, there's people that live in major cities that don't really grocery shop. They actually eat a lot of their meals out. So,
yeah,
but in this instance, it appears that you don't have to prove in order to get that
the standard.
155. So it's kind of like everybody's getting that credit, similar
Yeah,
to like there's child tax credits, where just the fact that you have a child, you would get the credit. Like you don't have to prove anything about that child other than, like their social security number.
I'll
But
get
like
that
you
kid.
don't have to prove that you spent so much. And so even if you had like food stamps,
Yeah,
which you don't pay tax on food stamps, you would still get the credit as well, because it appears to be
standard.
just flat. So, and
That's cool.
anything nowadays to offset any tax liabilities is
Yeah,
huge. I
yeah,
didn't dig far enough into seeing that this was like a refundable credit, so I'm not 100% sure on that. So it may just be $620 to offset your taxes. It may not be like a refundable credit like earned income credit, where if you pay off all of your tax liability, you would get a refund. So, I mean, there's lots of questions there, but I do like the fact that state governments are understanding that the cost of food, the cost of taxes is just it's almost like a death by a thousand cuts, and especially for
yeah.
senior citizens. I hate to say fixed income, because technically everybody's on a fixed income. You know what I mean? Whether you get like an SSI check or, whatever, everybody's kind of on a fixed income.
Yeah.
But when you think of like your low income, a 7% sales tax or, whatever on food really, really adds up.
Yeah, and quickly. And
And
it can make the difference of buying 6 meals or 7 meals worth of food. So,
it truly
no, it's a big,
can. And
yeah.
I didn't look up what the taxes, because taxes are usually done by county. There's not like a flat tax on states when it comes to, sales tax. But I know in some areas their food tax is just insane. We're talking upwards of like 13%. And when you think about that, so
Crazy.
for every $100 of groceries, you're going to pay 13 of it towards taxes. That's insane.
So, Idaho's, um, they tax groceries at the full 6% state sales tax,
6%.
which, which I
Which still,
know in our state is 1% on food.
yeah.
So, that, I mean, that's a massive difference
Because
when
you're
you're paying.
talking about $100 of food, that's $6 of tax.
Yep.
And, they're assuming that the average family of four spends $861. So you're talking about
200.
$215 per week.
Yeah.
You know what I mean? So that's, you're looking at like $15 a week.
Yeah. And again,
So,
that could be an entire meal.
yeah,
That could be two
absolutely.
entire meals.
Yeah,
So
I
yeah, that
agree.
really could make a difference on people and in people's budgeting. I mean, so the tax credit at the end definitely like is kind of a back end buffer, something you pay
Well, it's
throughout
kind
the
of like,
year.
it all comes out in the wash at the
Yeah.
end, similar to when you pay like your car registration tax, ad valorem tax, all that kind of stuff. You kind of get it back at the end of
Yeah.
the year. But I mean, it's better than nothing. What about the
Yeah,
other,
no, I agree.
46 states that don't do this?
Yeah, I agree. And it's, I mean, 100 and 120, well, 155 per person. That is significant. I'd take it. I wouldn't turn it down. Be like,
No, I wouldn't
how
turn it
dare
down
you
either.
offer me money?
But I feel like this is something that states could do, whereas most states have a level of tourism. So why
Yeah.
not make the tax revenue off those that are not residents? I think it's brilliant. But they did say that this tax credit, by upping the credit from 120 to 155, it would reduce overall sales tax revenue to the state by about $50 million.
Ow.
So you would have to kind of look at, if they're currently running in a deficit or a surplus. We live in Georgia, which has consistently been running in a surplus every year.
Yeah.
So I'm like, why couldn't Georgia do this? In addition to, sometimes we get, where any tax liability or taxes paid in gets a refund of.
Yep.
So it's one of those. I think we'll see a lot more of these creative tax credits at the state level popping up. Like, this is something I'll probably be keeping an eye on.
Yeah, no, I appreciate the perspective, and I really do hope that more states adapt to this line of thinking. Like, I think Florida has done something similar where all the taxes are taken out on their purchased goods, but there's no state income tax.
Right.
So like that balances things, and that makes a ton of sense for a state that has
So much
a
tourism.
it's so robust. So to focus on an external point of income instead of an internal source of income is always preferred, for sure. That's
Absolutely.
pretty smart.
All right. So we'll keep an eye out for that one.